FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
You're listening to the Financial Survival Network. It's Kerry, Lutz. We've got Andrew Hoffman. Since we missed Whatever It Takes Wednesday, I think this is Through the Roof Thursday, and maybe it's Through the Floor Thursday because the euro is sinking like a stone. Andy, man, it's just all coming together. The perfect storm, the perfect tsunami, I guess, right?
Yeah, as I call it, an article several months ago, the unstoppable tsunami of reality. And again, it's not just the euro, it's all currencies. It all started back in 2011, that mid-2011 when you had the euro crisis and the U.S. got stripped of its credit rating and gold was soaring. It was at that point, which I call the point of no return, where the powers that be realized that all that post-2008 TARP and money printing and lowering interest rates wasn't working. And that's when they decided that they had to, one, completely take over markets, which really has, taken a new life in the last year or two, and also to make this kind of QE and ZERP to infinity promise to the world. And since that time, and no one has printed more than us, which is ironic because we kind of act like, we tapered and now we're getting ready to raise interest rates, which obviously Janet Yellen's statement last week certainly did not validate. But the point is that since we started that money printing frenzy in 2011, the average currency in the world, where 7 billion people live, is down 40% against the dollar. And it's not because the U.S. is strong. It's because, as I predicted 2 years ago, it would be just like 2008. People are fleeing to liquidity because they know that the whole economy is collapsing. So they're simply buying dollars and QE-supported treasury bonds because there's nowhere else to go. I mean, of course, they're buying gold and silver also. But for now, the powers that be are able to keep the price down by naked shorting it. But that's what's going on. And that's why you've seen massive inflation around the world, which is now mingling with the massive deflation of all the overcapacity in the commodity markets, and is causing havoc. Now, the euro, again, Draghi speaking today, he just gave a normal ECB meeting where all they did was say, yeah, we're keeping rates negative and we're starting our QE on Monday. And what we were seeing is havoc. I mean, the euro just fell below 1.11 yesterday. I remember 1.11 was the level that it had fallen to the night that Syriza won the victory in Greece. It went through 1.11 yesterday, and today it's about to go through 1.10 on its way to parity. So while he claims that there's deflation all over Europe, the euro has lost 25% of its purchasing power this year alone. Actually, since year end, it's lost 7%. I mean, in the last 2 months. You look at the Brazilian real, where they had to have emergency rate increase to 13% today because the currency is at an all-time low. It's down 35% in the last year alone. I mean, we're talking about free fall in the supposedly strong BRICS nation, and still the currency is falling this morning. So it's across the board. You look at it, emerging markets, big markets, the yen is near its multi-year low this morning. We're talking about the most deadly mixture of inflation and deflation that you can imagine.
And there's just no end in sight for this, is there?
No, I mean, it's QE to infinity. In fact, Draghi, he said this morning, he goes, we may even extend this program if we don't get the 2% inflation we want. Extend it. It hasn't even started. It's starting on Monday. They're going to print 60 billion euros a month through September 16th. And he's telling the world that may not be enough. And I mean, let's face it, the way that these guys calculate inflation, they'll never get 2% inflation, which is probably why the 10-year German bond deal, I kid you not, the 10-year German bond deal this morning went from 42 basis points to 31 basis points just this morning on that announcement. Again, I've said all along, all the rates are going to go to zero because they're all going to front run QE to infinity. And right now it's most prevalent in Europe, of course, because it's right in the middle of this frenzy, just like it was Japan late last year when they increased their Abenomics. But it's only a matter of time before Janet Yellen has her reversal. And not only, again, remember last week she was on Capitol Hill and never does the Fed chairman and Humphrey Hawkins give incremental information about monetary policy. Never, never, never. They basically just rehashed what they've said recently and said, we will keep considering what's going on. And yet she took the FOMC statement from just 6 weeks ago and completely changed it to make it what I called in an audio blog, the most unequivocally dovish FOMC statement in memory. The Fed is done with interest rate, even talking about it, and they're probably going to be raising, starting up QE sometime later this year, because this unstoppable tsunami of reality is upon them. We are in a global collapse right now. Look anywhere, the Baltic Index, the price of lumber, our data. I mean, we had this morning our 6th straight negative factory orders month. 6th straight. We had our biggest surge in jobless claims in 10 months this morning. We had the 2nd straight huge jump in the challenger layoffs. And yet tomorrow, they'll probably come out and say, yeah, 250,000 new jobs that we fabricated based on adjustments and algorithms and logarithms that are based on nothing. I mean, it's gotten to the point where the whole world knows this, and it won't be long before the Fed actually has to start talking about lowering rates, meaning going below zero, or starting up a new QE.
Yeah, and we'll probably see gold get slammed on the strength indicated by the job report as well tomorrow, right?
Well, I would never say probably. The point is they always try to. They certainly try to calm it, and the jobs reports have become increasingly more of a joke. But look, we're talking about, and this is not predictions. I'm saying there's obviously a huge amount of buying here. I mean, my God, in India, you're seeing big buying right now. In China, you're seeing record buying, way above even last year's levels. And you're watching all these currencies collapses. What do you think the people of the world are doing with those currencies? I mean, the Brazilian gold, for instance, is now within 1% of its all-time high. Heck, Australian and Canadian gold came within 10% of their all-time highs earlier this year, let alone all the other currencies in the world. I mean, Russia, Ukraine, Brazil, Argentina, you name it, Turkey, Indonesia, across the board, you're seeing this. So yes, the demand is going to keep surging, and the supply, which I've been talking about ad nauseum, is falling. I mean, I wrote last week, initial mining earnings essentially guarantee peak gold. I mean, peak gold really happened 10 years ago. We barely, moved from that level. But now we're talking about the top 7 producers in the world are expecting down production next year. Their reserves were written off 15%. The mining resources, which I dedicated a whole blog to about how ridiculous they are being written off like crazy right now. And when it comes to silver, we just saw yesterday that Mexico, which is the world's top silver producer, had declining production in 2014. Fresnillo, the largest producer in the world, which is in Mexico, is forecasting basically flat production next year. And the best thing is Fresnillo, they're the biggest producer in the world. And they're saying, well, our big goal is to add another 20 million ounces of production by 2018. That's it. We're on a 750 million ounce world global base of production. And the best that the best can do is say, well, we want to get 20 million more ounces 4 years from now. And of course, you know that the only way they're going to get that is with massive capital investment. And I guarantee you if prices stay down at $16, they won't do it. Look, we had the CEO of Pan American Silver give an interview earlier this week at that PDAC conference, that joke of a conference, which I wrote an entire article about yesterday, since I've been there so many times, and it's such a self-defeating, boondoggle. He said, Pan American, we're one of the largest producers. He said, our all-in, not cash, our all-in cost of production is $16.50 an ounce, and we're in the lowest quartile of the entire industry. So he basically said 3/4 of the industry needs more than $16.50 an ounce just to stay profitable, let alone to stay in business, meaning to actually replace reserves, since these guys are writing them off left and right. So it was validated. To me, again, we stick by what the Miles Franklin webinar, All-Star Silver webinar said, $20 plus silver just to stay profitable, $30 silver just to stay viable. And he said it. He said you're going to see the mine production shut-ins now.
Yeah. Hey, and we didn't even talk about, Andy, the Apple iWatch, the high-end one, which is going to require, based on a modest projection of Asian demand for that high-end watch, Apple will need 746 tons of gold a year, 30% of the world's annual production, just to produce that one item of jewelry.
Well, it's Yeah, it's funny. And I wrote an article the other day called The Big Apple. And, people, and basically, if you read the article, I wrote 3 pages about all kinds of things. And then literally the last paragraph, the Big Apple was just named because it's an intriguing name. And I certainly wanted to bring up the topic. But you'd think that I wrote like a dissertation about how it's guaranteed that Apple will break the gold cartel. When all I wrote is this article from the Wall Street Journal, written by credible, supposedly analysts who did their research, claimed exactly what you said. That Apple, which is, by the way, unleashing, I think, this watch at a Monday event, so we'll get more information.
Right.
Yeah. That they said our goal is to make $1 million, starting in April, $1 million a month of these watches, which take up 2 ounces of gold each. And if that's the case, that would be a third of global production that they'd be buying for this one watch. And, it's certainly believable. What's that?
It could go higher.
Yeah, I mean, it's certainly believable given how the Asians not only love gold, how they love Apple. I mean, Apple has become the biggest company in the world because the Chinese love it so much, and they also love gold so much. And by the way, we know that the yuan, which has now been dropped to a 2-year low, and the offshore yuan, meaning the one that's not traded officially, is even lower. So they're going to depeg that, and it's going to make the price of yuan gold surge and get Chinese gold demand even more. So yes, it is plausible, but then there are people who go, well, that's not possible. You couldn't put 2 ounces of gold in a watch, and people wouldn't buy it, and you couldn't store it.
You can't. That's thing's called a Rolex Yachtmaster. It's with the band and the face and all that. It's got 2 ounces close to it. Sure, you can do it.
Okay, well, there you go. And my point is, I just simply cited the article saying, look, we got enough going for us positive from a supply standpoint. If this turns out to be true, it would be ironic that it would be Apple of all things that would do what everything else has not been able to do. But we'll see Monday. And again, it is certainly possible. But, some people come out and go, one person said, Andy, you've lost your credibility because of this. I go, what? I didn't write the article. I didn't even hype it. I said, look, here's the article. If it's true, it's a big deal.
and what if they do them in silver for poor Americans and they do it in platinum for rich Chinese? They could break all the markets. I mean, they do it in palladium. All right, for Russians, and they just proceed to bust every single. I know we're getting silly here, but look, the point is these markets are so fragile as it is that you got to wonder how much more physical demand each of these markets can take before they really fracture and the paper just goes bye-bye.
I mean, you think about it. Think about how many Brazilians are trying to buy gold right now, how many Turks, how many Indonesians, how many Japanese, how many Europeans. And by the way, not just Europeans, 300 million people use the euro in Europe, but 250 million people have currencies pegged to the euro. So we're talking about a significant portion of the global population, as many as use dollars, are watching the euros collapse. They're watching Mario Draghi say, I am going to destroy the euro if it's the last thing I do. I will do whatever. And it's funny because remember, he said, I'll do whatever it takes to save the euro. But if he thinks that saving the euro, whatever it takes, means printing as many as possible to destroy its purchasing value, I mean, do people not catch the irony of this? These people are all buying gold. The only people that are not buying gold right now are Americans. I can tell you from working at Miles Franklin. Sentiment has never been worse because we have the PPT has the stock market hitting all-time highs. We have all these IPOs. Not that the average person is buying them. We know it's all-time low retail participation in the market. But the point is people have been dumbed down to the point where if they don't see the stock market falling or gold rising, they don't rebel as much. And of course, since we have this surge into the dollar, our inflation is not rising like everyone else's right now. Although Janet Yellen has made it quite clear that she wants this mythical 2% rate too, and she will do anything it takes to get there too. So, we've seen the social unrest everywhere. We've seen collapse in currencies everywhere. And as I said from the beginning, I said it 2 years ago when the final currency war started, when I wrote about that, I said it's the dollar that everyone's going to rush into. And they have, and they're doing it en masse. And when the euro collapses, someone asked us in our Q&A, well, if the euro collapses and that's good for the dollar, is that going to be bad for gold? I mean, it's such a silly question. What could possibly be more bullish for gold than major currencies collapsing? I mean, I wrote an article, I think, a year or two ago that was called if a nuclear bomb destroyed Paris, right? Yeah, the euro would go down and the dollar would go up. Do you think gold would go down? I mean, it's incredible because these currencies are collapsing of their own weight, and then their own central banks are destroying them. The Swiss bank, who said we can't get gold, it'll destroy us. We need to protect that peg at 1.2 to the euro. Well, 3 weeks later, after gold had surged, the euro peg was broken, and now they're talking about setting a new peg at 1.05. And this as the euro is collapsing. I mean, you can't make this stuff up. These currencies are in the final currency war. They will all be destroyed purposefully, and the ones that aren't purposefully will do it on their own. And this will drive demand for real items of value like never before in history.
Yeah, and when you were talking about Draghi and the euro, he's got to kill it to save it. It just reminded me of Vietnam. They've got to kill that village to save it. And they say it with a straight face, and it's just absurd on its face. And it's looking more and more like 2015 is really going to be the year. But look, if they somehow manage to drag it out and kick the can to the end of the year, 2016, years with 6 in it are always bad, almost unequivocally. Think about it.
But it's an election year.
Yeah.
Aren't they supposed to be good in the election year? They'll always, look, the propaganda will always find something. As soon as you get near the year end, if we get that far, they'll say, well, it's an election year. That's good for the stock market. They're going to, I mean, the point is it could go at any time. It's only a matter of when. And, for the the sad thing is that when people say, well, when's it going to happen already? And I'm going, for most of the world, it's happening now. If you live in Ukraine, which hyperinflated last week, if you live in Russia, if you live in Brazil, which is doing so this week, if you live in Turkey, I mean, and a lot of these countries, these are the BRICS. Look at India; their currency is back now down toward its lows, and this is right as their new government also betrayed the people by not repealing the tariffs and thus guaranteeing higher prices and a bigger black market. I mean, there's a rush into gold around the world. And of course, silver, which we even see in the U.S. Mint with the silver numbers, are still as strong as ever. And it's only a matter of time before the cartel loses their battles to support stocks and support bonds and keep gold down. I mean, but they're losing everywhere else. I mean, they're losing the commodity markets, the currency markets. They're losing the political fight, the social fight. Look what's going on in Greece right now. I mean, Greece is not going to make it this year. There's no doubt that Grexit is happening this year. And because of it, you're going to see Podemos take power in Spain at the end of this year. You're going to see the new front, I think, National Front take over in France. You're going to see the same thing everywhere. The 5-star movement in Italy, across the board. The debt has to be written off one way or the other, and it's going to happen.
Yeah, it certainly can't be paid. And if it could be paid, then it would leave basically the entire country with nothing left, and the entire world. Where would all that money go?
Well, there's no money to pay it, so that couldn't happen. I mean, there's one way to pay it, and that's to hyperinflate, which is what many countries are doing right now. It's the only way, and it's the way that we're going to do it too.
Yeah. So you're going to pay it either way. It's going to be liquidated and written off. So it's just better to default on it, get it out of the way, make the preparations for the banks, and just basically take those derivatives, make them illegal, shut down those derivative markets, and let's start over with a clean slate.
Well, that's what's the best case for humanity. Although in the short term, it's horrifying. I mean, it could cause World War III. It'll certainly cause all the people in power to be gone, and all they care about is staying in power. All the rich people, to take giant hits, and they're the people who call the shots right now. They're the ones with the lobbying power. So no, they'll never agree to do that. It will be the markets that force it upon them, or situations where in Greece the people force it upon the politicians. I mean, what's going on there is catastrophic. They're talking about a new bailout now. I mean, I'm not kidding. They just did this deal, which wasn't even a deal. The Eurogroup wrote a little piece of paper that said, "Okay, Greece, sign this. We agree to make reforms." That's basically what they said. And the people are rioting in the streets, and they're not going to make reforms. They don't even have money to make reforms. And it turns out here we are a week later, And they're talking about a $50 billion bailout for people who don't want bailouts and just voted Syriza in on the promise of no bailouts. They're not going to get a bailout. They're going to default probably within this 4-month period, and certainly by the end of the year. There will be a Grexit. There is no way, I'm on the record, no way, shape, or form Greece is still in the Eurozone a year from now.
Yeah, I don't see how. I don't see how. I mean, we've really hit the precipice. The can no longer be kicked down the road. There's no road left.
For Greece, there isn't. For us as the reserve currency holder, again, I've said it all along, we're the top of the totem pole. We're the head. The cancer gets the rest of the body, and then it goes up to the head. The totem pole gets submerged. The top stays up the longest. So, yeah, we have a little more can than everyone else. We can keep dollar price gold down a little longer. We can keep the Dow Jones propaganda average up a little higher. But for everyone else, they're underwater. If you're in Europe now, you're underwater. If you're in Greece, you're drowned. You're dead already. There isn't even a hope. I mean, the whole thing of this deal, which isn't even, they didn't even make a deal. There's no deal made. The deal was, all right, you don't have to pay the debt for 4 more months. But 4 more months will pass. What are they going to say? You don't have to pay it again? Because if you do then the debt is defaulted because you've admitted, if you ever admit it, that they're not paying it, then it's a default. So they're going to, if the people don't do it first, then, the politicians will do it. And there'll be no Greece, and then the whole worry about the rest of Europe. I mean, the euro is going way below parity. I mean, way below. I don't think it's going to, I know it's not going to survive long term, but I think it's going to go below parity this year. And I think that the reaction to it economically and sociopolitically is going to be just horrific.
Yeah, well, I think our only hope, Andy, is the new iWatch. That's about the only thing that can keep the world economy afloat at this point.
Well, I mean, the thing the last thing we'll end here with Apple is, I mean, we watch all these sci-fi movies over the years about companies that take over, whether it's Skynet in the Terminator or Omni Consumer Products in RoboCop.
Right. Yeah.
I mean, there are countries where single companies are that big, but it's really scary, especially when you see Apple talking about going into all these other industries. Is it possible that they're going to be so rich and powerful that they're going to take all the talent from all the other companies and become this colossus that can move markets? I mean, it is possible.
Maybe,
I don't know.
They're talking about the Apple Car now and so many other products. I mean, they got so much cash. They got $200 billion worth of cash. They're going to be the first $1 trillion valued company if the Dow propaganda average in the U.S. stock markets keep, because they're not on the Dow, of course, keep going at the rate they're going. So who the heck knows? We could be living in a corporatocracy where countries just bankrupt out and cease to exist, and corporations step in and run things.
I mean, when you think about it, and these corporations, which have been, the big lobbyers, they've gotten all the benefits that have enabled them to grow like this. I mean, some of them have lost their way. I mean, IBM lost its business base, and then it borrowed billions to buy stock back, which is falling, and now they have 75% debt to cap. So, they're the dying breed. But then you have the new breed of companies which have gotten so rich at the same pace that the governments have gotten so poor. I mean, to see, it's funny. Apple keeps almost all of its cash offshore. I mean, nearly all of it is offshore. So they don't pay taxes on it. So while they are growing monstrously and not paying taxes, the U.S. government is collapsing and not receiving taxes. So that the lobbying power that the Apple organization and others like it, I mean, there's no other singularly like it right now. But there are other big corporations, healthcare companies that have benefited from Obamacare and the population growth, that kind of thing, that are becoming so big that they are going to be too big to fail, or I should say too big to be stopped.
Yeah, exactly. It's really, it's shocking. It's shocking. It's like a Frankenstein kind of thing that's gotten out of control, and it's just amazing. Think about it.
And yeah, one more comment. Speaking, you bring up Frankenstein. This will be a last thing. The Frankenstein monster. I don't know how many people saw this yesterday. There was a merger there's a company called Springleaf. You talk about a modern day demon. This company has merged the subprime lending units of Citibank and AIG with this giant merger with a stock offering and all this.
Yes.
It's the giant subprime lending behemoth of 2015. And you can't find, I don't want to say, quote, a market top, but a top of the hubris. This is it.
Yep. Caught that. You're absolutely right. And great point. And hey, on that note, we got to go. But hey, great talking to you. We will catch you next week on Whatever It Takes Wednesday. Back to our normal time. And you be well.
You too.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.